there's David Darst. Good to see you, my friend. It's always wonderful to have you on and get your insight on this market. It's pretty amazing to see the run we've had. We were just talking about what an August it's been. It's the best August for the S&P and the Dow since the 1980s. I know you have different scenarios, a bullish one, a bearish one, and some stock picks today. Which one are you leaning more towards at this time?
Well, Nicole, and thanks for having me on. It's good to see you. I would say the market wants to lift. You see the way it's acted in August, even though, as George just mentioned, the trading volume has been on the light side, which traditionally it is in the summertime. Basically, you've got the monetary stimulus. You heard Chairman Powell talking about keeping interest rates low. GDP is supposed to turn the corner. We just had the numbers, minus 31.7%. This coming quarter is supposed to be minus 23 that we're in now. Minus 13 for the fourth quarter, but then, Nicole, plus 13 for the first quarter of next year. And most people are right now looking for a 20% decline this year, but a 29% increase next year. The next thing is jobs, retail sales. Nicole, the manufacturing, the ISM manufacturing, the ISM services. The next thing is all the cash that's on the sidelines, $4.6 trillion just sitting there that still can be put to work. And lastly, why is the market going like this? I think that there is a hope that there's going to be this release, like a dam bursting of demand, of psychology, of sentiment, if something comes through on the vaccine front, Nicole. There's plenty of negatives out there, as you just pointed out. You've got concentration. You've got COVID uncertainty. You've got congressional uncertainty. Are they going to help out people with the additional stimulus? You have China. That's the fourth C. The China equation right now is not the most favorable. However, the way the market is acting with all of this congressional, COVID, China, and concentration uncertainty, the four C's, the way it's acting, it wants to lift. Now, is it ahead of itself? Yes, it is ahead of itself. But I think the election is going to play into this as well. You want to watch how it looks, not just for the White House and the House of Representatives. You want to be looking at what it looks like for the Senate, because that is one of the key things. And I think the market will take some cues, Nicole, from how the Senate is beginning to look as we get closer to Tuesday, November the 3rd of this year.
Yeah, and, really looking forward to the election. What's interesting is you're talking about different scenarios, with the election. Do you have one that might be better for the markets that you're going to say, oh, I'm more likely to put my money in, or not necessarily?
Great, Nicole. Great point. I think to me, the key is the Senate. If the Senate looks like it's going to go with Democratic control, and you then put that in charge of together with what's likely to be the House control, no matter what happens with the White House, whether it's President Trump or Vice President Biden, the key that you're going to watch for in terms of scenarios and in terms of positioning. Now, you want to basically be thinking about some themes. Forget about the election. Forget about 2020 and 2021. You want to be looking at the growing middle class globally. You want to be looking at money printing. That's on the table. It's been the big message from this Jackson Hole Fed conference. You want to be looking at something that can give you all weather, that can, no matter what happens to the White House, the Senate, and the House of Representatives. You've heard me on previous occasions with you, Nicole, talk about return on equity. You want to position yourself in companies that have strong return on equity that's generated from good revenue growth and good margins, not from a whole bunch of
tell me about Verizon then.
Well,
tell me about Verizon. That's a name that I think you've liked before.
Yes, Verizon, I have liked before, Nicole. You're absolutely right. It's got a nice yield. It's got over 4% yield. We're in a yield-starved world. Many of your viewers need some yield. They need some income. 4%. Now, they pay out a lot of their earnings. Their dividend payout ratio is very high, but they're the number one, as you know, wireless carrier in the United States. They also have fixed line, and they have entertainment, and they have e-advertising. So, I mean, I think their position, this would be a digitalization theme and a high dividend theme. Yes, they've had a 30% return on equity, but don't forget, this is a utility. If you're looking for a return on equity, you want to be looking at Estee Lauder. You want to be looking at Zoetis. Estee Lauder, as you know, is one of the three biggest in the world in terms of cosmetics, facial creams, hair care, beauty products. They only have 29% of their sales in the United States. It's 71% global exposure. And that one is a return on equity, Nicole, of 31% for the last 10 years. Look, this is the return on equity story. The Verizon, as you just mentioned, is a yield story, and you do want yield. Another yield story is RIO, and Rio Tinto is the second largest iron ore mining. They've got gold, they've got uranium, and that is basically going to play into the growth of the global economy and money printing. Money printing, sorry.
Right. I see what you're talking about. Return on equity, getting some dividend payouts, all of those things in Verizon, RIO, Zoetis, and Estee Lauder. Great picks there. I'm also just wondering about what everybody loves to trade, and that is either tech. You know, I don't know. People have been hot on tech. They've been hot on work from home. And they've been in a lot of those travel stocks, airlines, cruise lines, to try and get some volatility. So what are your thoughts on those on those areas specifically? A quick thought on each.
Nicole, stay at home stocks versus out and about stocks. I do believe that you want to begin to nibble at some of these beaten down. Look at this. You have no yield from bonds. Take a look at the energy sector. In a way, they should be maybe the bonds in your portfolio with these dividends. I just mentioned Rio's dividend yield is 6.1%. Verizon is 4%. Some of these energy companies, as you and I have discussed before, Nicole, you take a Chevron, it's over 5%. You take Exxon, it's over 8%. So you want to basically look at your portfolio. The old rules of stocks 60%, bonds 40% no longer apply because bond prices are so elevated at these ultra low yields. So there's one of the positioning things that I think you want to begin to look at. Now, value versus growth. Nicole, as we've discussed this before, the growth, the differential between growth stocks, that's your tech stocks, and your value stocks. What is that? That's banks, it's real estate investment trusts, it's utilities, and it's energy. Those are your traditional value stocks. I have been suggesting to people that they begin to look carefully at some of these names where the dividend can be maintained and nibble at that and put that in there to generate some income. Because no question about it, you've got these 5 Hercules stocks that are holding up the market. Hercules, you know this from Greek mythology, was told to perform 12 labors. And Hercules, one of the labors right now of Hercules is holding up the stock market. And that's those 5 stocks, Facebook, Amazon, Apple, Netflix, and Google. We've talked about those as well. But begin to peel off a little bit of this and go into some of these that they're beaten down or they're ignored, they're neglected, but choose quality. That's another thing we've been emphasizing. Choose quality.
Okay.
Get some income. There's nothing wrong with having a little cash right now. Cash, as Mr. Buffett talks about. And this brings us to something else, Nicole. I don't have any problem.
Okay,
We've
quickly.
on your show before to own some gold mining shares. And this is the Fed money printing. This is currency cheapening, currency debasement over the long term, and you want to have some in there, a position in something that protects. Don't let money debasement debase you. You ride the tiger. Do not let the tiger ride you.